A few years ago, getting approved for a mortgage meant paperwork, endless emails, weeks of waiting, and hoping some stranger behind the desk understood your life. And if you were an entrepreneur, freelancer, or someone who didn't fit the traditional mold, the system often worked against you. The financial system was built for a different era, an analog world. But today, artificial intelligence is beginning to change one of the oldest and most bureaucratic industries in existence, lending. The question is no longer, can AI write essays or generate images? The real question is, can AI make financial systems faster, fairer, and more human? Today's guest, Michael Vandi, is building exactly that. He's the founder and CEO of Addy AI, a company using artificial intelligence to help automate the mortgage and loan origination process, helping lenders move from weeks of manual review to intelligent AI-assisted decision-making. But this conversation goes far beyond mortgages. We talk about why entrepreneurs are often penalized by traditional lending systems, how AI could reduce bias and bureaucracy, whether AI will replace financial workers, and what happens when machines begin helping decide who gets access to capital. Michael also shares his journey from Sierra Leone to Carnegie Mellon to building an AI startup in San Francisco, and why he believes we're entering a completely new era of financial infrastructure. If you've ever felt frustrated by banks, confused by credit systems, or wondered how AI will reshape the future of money and opportunity, this episode is for you. Here's my conversation with Michael Vandi, founder and CEO of Addy AI. Before we begin, quick disclaimer. Nothing in this episode should be considered investment advice. Results discussed have not been independently vetted. Any claims made by the guests have not been verified. The content is for educational purposes only. Views expressed by the guests do not reflect those of the host or this show. Hey guys, welcome to this week's podcast episode. I've got a guest for you today, Michael Vandi. Today's conversation is all about AI, loan origination in the fintech space. He is the CEO of Addy AI, based out of San Francisco or in the same city. Happy to welcome Michael to the show. Welcome, Michael.
Thank you so much. Happy to be here.
I'm scouring the globe for innovators and disruptors, and you're one of those. Talk about your journey, what Addy AI is, and how the audience can learn more.
I am the CEO of Addy AI. We are an AI loan origination software. We help banks and non-bank lenders train AI assistants to automate the loan origination process, helping loan officers do due diligence with automatically reviewing applications with AI, moving it from application to closing the loans. Our software is being deployed at one of the largest non-bank lenders in the US, and they process a lot of mortgage loans a year.
It's interesting because I've been doing a lot of research, thinking this whole idea where loan origination for housing, credit scores, and this whole process is so cumbersome. It's only if you are rich, you have access to this. Talk about this idea of where Addy AI came about and delve into the specifics.
There are a couple of things. Sometimes it could be less cumbersome if you look at what kind of data they're looking at. Sometimes it could be very cumbersome. If you're looking at bare credit scores, if your credit score is not over 50, it's like an automatic rejection. It's easy to write software for that. If you have a certain amount of assets in your bank account, when you submit your bank statement, it's an automatic rejection. Where the cumbersome process comes into play is when they have to do due diligence into the entity's background, whether it's a company or it's an individual that needs the property. The loan officers have to spend days and weeks. That's a lot of back and forth. Anyone who's gone through the mortgage lending process, it's a really long and stressful process. Giving the loan officers the tools to make the process faster is what we try to do at Addy AI.
I hear these stories. For example, the Apple CEO was able to apply for credit very easily, and his wife applied for the same thing and got rejected. I read on Twitter, one guy, he paid down his balances and his credit score went down, and he's WTF. It's supposed to go up. All these crazy, ridiculous stories. Talk about how AI is changing the mortgage lending industry. How is it getting rid of these inefficiencies? How is it making it more fair and equitable?
When you look at any industry, in order for it to be efficient, at any stage of the process, there has to be a clear path to the next stage. Think of things like production lines at car companies. After the doors have been fixed, it then goes to the electrical. So it's different in the mortgage industry because every single case is different. People have to find the time to figure out what's the policy in this particular state. Is there a state policy that we're meeting? One of the first things that AI is changing is doing automated policy checks. As these scenarios come in, it says, oh, first, the location is in Maine. We don't lend in Maine. That's like an automatic disclosure. So a loan officer doesn't have to spend 20 minutes going through the documentation to see that, oh, hey, we don't even do this. And after that, it's all the steps in the process. What are the information that we need from this borrower, client, or broker? You want to have automation helping the loan officer do that back and forth communication until all the information is present. When the information is present, the loan officer can actually be a human reviewer. That's how we mitigate risks. We don't automatically say, oh, hey, once you have all the information, hey, you're good to go. We think of it as a co-pilot that you give to loan officers to help them make decisions better and faster. And obviously, it's like a great experience for the clients and the lenders.
So I love this, using data and algorithms, cut out all the excess BS. I love this idea of the human at the final stage saying, okay, all this, now we need to do a check, things that really need to be checked. The other question is changing the mortgage lending industry. How are you looking at how AI is changing the way home loans are reviewed? The typical process is you get pre-approved, submit all your forms, income statements, it gets reviewed. How is AI changing that?
One of the ways that AI is changing, the process is becoming a lot faster. I can speak of it from the perspective of the broker, the client, than on the perspective of the lender. In the perspective of the client, you get to receive correspondences really fast. You don't have to wait for a loan officer to do their research before they get back to you. You get to have a great experience. Another thing is you get to understand your policies in a personalized manner. When you get approved and finally receive that policy, it's dozens of pages. You don't know the fine print. You can chat with a personalized AI assistant and say, what am I getting into? You can chat with it in natural language. It tells you exactly, oh, hey, this is a 30-year mortgage. You have to do XYZ. If you don't pay XYZ by this time, it explains like a human, not huge jargon that you don't understand. That leads to a great experience for the broker and client. There's many different mortgage loans. The ones that you qualify for, let's say VA construction loans, each have different policies. Not everyone can understand. Having this assistant that can tell you about it is really great. On the side of the people are understaffed, loan officers are overwhelmed with applications they have to review. These lenders have the possibility to equip loan officers with tools they need to scale much faster. The bottleneck in these systems is people working slower, productivity gains and increases because there are more people applying for mortgage loans than there are loan officers to review. It's supercharging them with the tools they need to make decisions faster. The way I see AI changing financial services, because financial services is very number driven, has a quantitative measure. ChatGPT, when it hallucinates, you don't know whether it's right or wrong because you need to have expert fact check. With financial services, there's actual number, the source of truth, the number, you can check if it's right or wrong. That's one of the ways I think AI is changing financial services and mortgages.
This episode is brought to you by Netflix. Most Valuable Promotions and Netflix are hosting a blockbuster triple headliner Saturday, May 16th. Ronda Rousey returns to face fellow women's MMA pioneer Gina Carano in the main event. Plus co-mains Nate Diaz versus Mike Perry. And the best heavyweight in the world, Francis Ngannou versus Felipe Lins. Watch Ronda Rousey versus Gina Carano, live only on Netflix. Saturday, May 16th at 9 p.m. Eastern Standard Time, 6 p.m. Pacific Time.
Quick pause here. If this episode is making you rethink how your income is structured, that's intentional. Information doesn't create freedom, structure does. At the end of this episode, I'm going to show you how to diagnose whether you're building leverage or just scaling complexity. Let's get back into it. A lot of my friends and colleagues or entrepreneurs, we've transitioned from W-2 to building businesses. How does the algorithm treat entrepreneurs, people creating businesses over W-2s? In the past, you had to submit your W-2s. If you're a consultant, independent contractor, you submit 1099s. How it seems for business owners that make more than W-2, the system disfavors them over W-2. So how is AI changing that?
The good thing about AI is you can train it. That's the bad thing about AI, because when you train it with flawed data, then you get garbage out. We train with diverse amount of data. There's in AI, when the model becomes trained so much with one particular data set, it becomes skewed to that data set. If you train it with data from contractors who are not on W-2, they have companies, and then they get approved a lot, the tool learns that, hey, these are actually that we should be lending to. But if we try to not skew the data, then it becomes fair and equitable. We have done a lot of work to make sure our training data is not skewed towards a particular group of people.
You mentioned this idea of more applications to loan officers. We've seen it with Uber and Lyft, Netflix, Tesla, the obliteration of the need for humans. What is this going to do to the human side of the equation in the mortgage origination process?
Wow, that's a tough question.
Yeah.
I'm going to give my honest opinion of where the technology is right now. It cannot replace every single thing that human does. You would not want it to at this moment. The majority of Americans have their net worth in their homes. You would not want to give that power to a machine deciding the asset class of the majority of Americans. How we think of these things is as a co-pilot for loan officers. One thing we've seen repeatedly when certain models come out, they are as smart as a sixth grader. After a couple of months, they are as smart as someone in 12th grade. Now we're getting to a point where they are as smart as someone who's as a new grad intern coming in to help you. If you think of it as a new intern who you can give particular tasks to, imagine being like a residency. We consider it as that. The loan officer right now is the lead surgeon, and the AI is the resident right now. Over time, 10, 15 years from now, that would change. When that changes, we have to think about how we approach it as a society. That's not a question for someone like me who's an innovator to think about. I should think about it, but that's not a question that I should have been making policies to affect.
I think the obliteration of industries is actually good because it forces people to get off their butts and do things, as opposed to I go around and I see all these government workers and they just sit there and basically do nothing. It's good to have disruption, for better or for worse. You're in San Francisco, one of the best places for VC and startups, home of the Mag 7. Talk about your journey, why you started it, pitfalls and challenges.
I have an unconventional journey to Silicon Valley and tech. I was born and raised in Sierra Leone. From a very early age, I loved building things. I learned how to code when I was 14. My mom was a teacher. She introduced me to these technologies. I was 7 years old, got my first laptop. I might have been the only kid in the neighborhood, the city with a laptop at 7 years old in West Africa. I learned how to code, got a desire to build things, applied for college in the United States, came to the US, I studied computer science. I was involved in extracurriculars, went to work at AWS on AI, and then did my master's in software engineering and AI at Carnegie Mellon. While I was in school, I started tinkering with AI, lived through two different realities. In Sierra Leone, there's no mortgage tech. I come to the US, and the difference is night and day. When I studied AI, the processes are so mundane and slow. They have roadblocks that could be improved. I started tinkering, creating this tool that could help loan officers with email correspondences. A bank reached out and was like, hey, this could be really useful. I didn't intend it to be a company at the time. I built a small team of my friends from Carnegie Mellon, became extremely useful to them. Once I graduated, I was going to go back to Seattle to AWS, and I was like, I don't need to. I could move to San Francisco and work on this company. We've been able to do really well ever since.
I see a lot of innovation in London, Dubai, Singapore, China, and India. But do you think San Francisco is still the best place to build for tech startups, or is it shifting away now? A lot of the investments are going outside of the United States. Curious about your thoughts.
The best place. Obviously, I am biased. As an entrepreneur, odds are stacked so much against you that the most minimal optimization that you can do is where you live. And in San Francisco, there's a lot of resources, network, and opportunities around. 99% of businesses fail. You could move to a place where you have more chances of success. Dubai, other places have chances of success, but in San Francisco, it's unparalleled. It's coming back. I'm glad you're in San Francisco. If you want to chat sometime,
Yeah, definitely. I'm in San Francisco for the summer to have exposed to stable climate. That was really fascinating. How can people contact you, find out more about Addy AI, your socials, check out the work that you're doing?
Our website, they can go there and contact me. I'm on LinkedIn, Michael Vandi. Reach out to me. I'm active there. I'll be happy to chat.
I really enjoyed this conversation. I always love talking with tech entrepreneurs, forward thinking, discussing these issues. Thanks so much for coming on. Let's zoom out. If you're a physician, founder, or high-income professional, and you feel like you're working harder every year, but not structurally freer, you're not alone. The mistake isn't effort, it's architecture. This show exists to help you convert expertise into scalable, faster, and with fewer expensive missteps. Here's the diagnostic I mentioned before. If your income requires your constant presence, if your capital isn't compounding outside your profession, if your highest value talent is doing low value tasks, you don't have a growth problem, you have a leverage design problem. And if you want to fix it with clarity instead of guesswork, I offer a limited number of one-on-one leverage strategy sessions. We audit your income model, capital deployment, authority positioning, and structural bottlenecks, and design your highest return move. If you're serious about compressing years into months, the link to apply is below.